Operating a physical storefront or selling items face-to-face comes with unique financial risks, especially when dealing with digital payment platforms. PayPal is widely recognized for handling online transactions, but merchants frequently wonder how it manages face-to-face exchanges and whether a physical handoff voids security guarantees. Understanding the exact boundaries of payment safety rules is essential for anyone running a brick-and-mortar business or selling goods locally. The foundation of transaction safety on the platform relies on the Seller Protection Program, which is designed to guard merchants against financial losses from unauthorized charges and claims where a buyer states an item never arrived. Traditionally, this framework was built entirely around shipping physical goods through recognized carriers. Because online transactions require verifiable tracking numbers and shipping addresses that match the transaction details page, face-to-face deals historically fell outside these safety nets. A standard peer-to-peer payment or a manual transfer handed over while exchanging a physical product in person lacks the carrier documentation normally required for verification. If a buyer decides to file a chargeback with their bank or claim that an unauthorized user accessed their account, standard in-person cash apps or manual mobile transfers often leave the seller unprotected. Without a valid tracking number or delivery confirmation tied to a shipping provider, resolving a dispute in favor of the merchant becomes nearly impossible under conventional rules. However, the platform accounts for modern commerce by providing a specific mechanism designed to bridge the gap between digital wallets and face-to-face retail. Physical items delivered in person can qualify for protection if the transaction is processed using a designated goods and services QR code. When a customer scans this specific code inside a physical store or at a local meetup to complete a payment, the transaction can achieve eligibility status within the system. Meeting the criteria for face-to-face protection requires strict adherence to system guidelines. The payment must be marked as eligible on the transaction details page, and it must originate from a single, verified account rather than split payments or installments. Sellers must also be ready to provide alternative documentation or proof of fulfillment if a dispute arises, proving that the item was genuinely handed over to the correct person at the time of the exchange. Standard peer-to-peer transfers sent through friends and family options offer zero protection for commercial exchanges. Utilizing that specific setting for local sales strips away all merchant safeguards, leaving the transaction completely vulnerable to reversal without recourse. Business owners must ensure that any face-to-face digital transaction utilizes the correct business infrastructure rather than casual personal transfers. Evaluating whether this payment method fits a local business model depends on strict compliance with these checkout features. Utilizing the designated QR code system allows merchants to accept mobile payments face-to-face while keeping safety nets active against fraudulent claims. Ignoring these structural requirements during local exchanges exposes a business to avoidable chargeback losses and disputed transactions.